All right, hey, what's going on? This is Dan Keller, and welcome back to another weekly mortgage market roundup and preview where I help you make sense of today's market. Listen, I do this every single week because I want you to get the most out of home ownership. I want you to understand that the largest financial decision of your life in buying a home needs to be woven into both your short-term and long-term financial goals. Whether it's identifying the right loan program, restructuring your current loan program, or coming in and really crafting a rate lock strategy, or going through an annual mortgage review with me in my office. It's important to understand how serious I take my job and how serious I take the idea that your mortgage does and needs to factor into your long-term financial objectives. So what the heck is going on with today's market? What's going on today that can benefit you? I want to explain that to you. So I want you to focus today right now on this big, long, red vertical dash. That is when the Fed chairwoman, Janet Yellen, came out a couple of weeks ago and basically didn't say anything profound. The markets just reacted negatively to what she said. So the bond markets reacted negatively to what she said. So I tweeted the day after that event, and I said, you know what, I think there's nothing that really caused that. I think it was a knee-jerk reaction, and I think we're going to spend the next 7 to 10 days recovering from that event, and we certainly did. So what you can see, these green dashes, vertical dashes, are market improvements daily after that event. I tell every single one of my clients that, it can take a week, it can take a month, it can take a year for the markets to improve, but they can deteriorate in minutes or hours. So that's essentially what we saw here. We saw pretty good market activity, and then it just fell off, and then we spent the last week and a half recovering. What I want to talk about right now are these horizontal dashes. That's our safety trading range right now. As long as we're trading within that 103.8 to 104 range, I think the rates that we see right now are going to stay. I don't think we're going to stay there long. I think this week with the economic data that's coming out, specifically Wednesday through Friday on jobs and unemployment data, I think we're going to see the market move. I think everything that I'm reading right now, we're expecting better than expected economic data as it relates to jobs and unemployment. So if that's the case, I think interest rates are going to be going up near the end of the week. So my rate lock advice to my clients is to be prepped before the end of the week. And hey, if it turns out that the market improves, then hey, it improves and we ride into next week. But we're at least prepared to lock in the event that it goes sideways, all right? One of the other things I want to bring your attention to is this wild card right now called Russia. What's going on in Russia is truly a wild card. Typically, when you have negative global economic news, such as war, such as tsunamis and earthquakes, investors pull their money out of the stock market and they park it in the safety of mortgage bonds. Traditionally, interest rates improve as a result of those events. So, depending on what goes on with Russia, we're keeping a close eye on that. In closing today, I want to kind of shed some light on making sense of the mortgage market right now and what interest rates are doing. Focus on this big green arrow. That's good. That means rates today are down from last week. That's a good sign for now. And I want you to understand as I go over these rates, these are not quotes. These are kind of just averages or estimates as to what rates are at currently at our bank right now. So, and we're not going to get into fees and points and all that. These are just base estimates, all right? So for our government loans, FHA, USDA, and VA, our 30-year fixed rates are between 3.875 and 4.25 right now. Our conventional Fannie Mae and Freddie Mac backed loans, 30-year fixed rate loans, are about 4.375 to 4.625. And then our high balance loans, those are the loans between 417 and 506. Those are running right about 4.375 to 4.625. Now remember, the high balance loans and conventional loans are credit score and down payment driven, so that's why you see kind of a higher estimate with those right now. If you want daily updates, please follow me on Twitter at DanKellerMTG. And I want to wrap up with a stat, and I think this is pretty important. Did you know that 26 jobs are created every time a home is purchased? This means a lot to us in our office as I currently employ about 3 people right now in my mortgage practice. And, we celebrate every time we close a loan. Not only are we obviously closing a transaction and we get paid as a result of that, but, we are creating jobs. We're creating a better community that we live in. And with educated homeowners, with responsible homeowners, it does add value to the community. So in closing today, if you have any questions, if you found this data and this information valuable, please forward it to a friend, family member, coworker. If you're a real estate agent and your clients are not sitting down and having a mortgage planning analysis and craft a mortgage rate lock strategy. I think it's something that would add massive value to your business, and I would look forward to working with anybody that you want to share this data with, okay? Hey, until next week, have a great week, and we'll talk to you then. Bye for now.